I have got so much to talk about with you stock nerds and market lovers. One, Putin is short. He's clearly short, and he shorts the futures because what happened today. So I go to bed 1:30 last night, and Danny, the note Danny's taking, you can't see. You saw it. I
did have it.
Yeah, Zach just switched to Danny. Danny's like, Putin is short. He's writing the note right there. Putin, short. So I'm up feeding Graham. I'm watching the supermarket sweep. There's a lot going on. And the market's lower, right?
Sure.
It's then Europe gets really open. They open up about 1:30 Central and in the morning. And so then the market just gets a little higher, right? And then all of a sudden, I release note. I say, negotiations going well. And I get the futures to pump. And then I tell Igor.
Pump and dump.
And I tell Igor, short the futures now. And what happens? So what you get is you get this kind of rollover effect. And so this is a market in trouble. And so you're like, hey, Tim, thanks for the long intro to tell me this is a market in trouble. But you see this in a bear market, which is what we're in, right? Or a corrective market.
So far.
Do not be so dire, Tim. I will tell you when bear market. And so what you have is these really sharp rallies. I don't know how we finish. Like, it's a market. Anything can happen, right? As evidenced by the Putin puts. And so the Putin puts, the P&P. You down with me?
Got it.
Can't spell Putin without put.
I just stumbled.
Oh, Don!
Wow.
Don! Don just made the headline.
Okay.
He just made the headline.
The concentration art file today is
All right.
mind blown. Mind blown with Don.
Perfect.
Yes,
Galaxy Brain Don.
the wordsmith. The wordsmith.
Oh, can you get him on an anvil, like a metalsmith?
Like a blacksmith?
Yeah, there you go.
That's not bad. I like that.
Yeah, I'm working at
hammering out something.
Oh,
yeah.
Also, think about this.
What's up?
Lenin, Stalin, and Putin all end in IN.
Ooh.
There's got to be something in there.
I'm thinking that.
I think it's their language.
It could be anything.
Khrushchev doesn't end in IN.
It's either EV or IN.
Well, Yeltsin.
Yeltsin did.
Yeah, Yeltsin did. But he's the reason why Putin exists, right? Because he did not steer so hard lined, and he lost all the Baltics and the republics, and then before you know it, you get a Putin. You got it. They say you got to have a Yeltsin to get a Putin.
Got it.
Yeah, that's what they say. Well,
but that raises a good question you brought up. Does Putin short the market before he invades? I mean, he knows he's going to invade. Why would you short the market a couple days before?
Like, I know, listen, stock nerds, market lovers, if you're taking anything we say, like, you guys are crass, you guys are rude, just give it a rest. Yes. The answer is yes. Like, why wouldn't you? Right. And a lot of people, we've talked about this before, how the 9/11 hijackers.
Yeah, terrorists did it. Yeah.
They shorted the airlines with puts. And
the insurance companies.
And the Nigerian brothers are the ones that really sniffed that out with the FBI and could track back. And that's how they found who was financing this. Yeah, the whole big thing there. How do you pay?
Tracked it down to a brokerage firm out of Germany.
Yeah, how do you pay for the operation? Short the market, either outright or with puts, and usually with puts. And so, and anyone who thinks that part is a little facetious, that's not facetious. Yeah. That actually happens. By the way, rich people do this nonsense all the time. They don't have to. Barry Diller, CEO of IAC, now he claims that there's nothing to it, but his son-in-law, and another gentleman just magically believed in the value of Activision days before, like before Microsoft stepped in and bought them.
Ooh.
And that's the thing.
Just extremely good timing and luck. Extremely good luck.
Yeah. Well, as they say, irony. And so Alanis Morissette said that best, right? Isn't it ironic?
Well, that's why when they audit us, they want to see family members' accounts too. They want to see your wife's account.
And listen, let me be clear. I don't know if Barry Diller just had good luck. There is a chance that he just had good luck, or he went to one of those dinners that they want to regulate now, where
somebody talking in the elevator.
Well, Bill, I don't want to use people's names, but hedge fund manager A, B, and C go to dinner together.
Bill Jackman, right?
Yes, and with Bill Gates, and they go and they talk about ideas. Hey, wouldn't it be interesting if Microsoft bought Activision? Like, now that's not unknown information. It's just a hypothesis type question being formed, right, over a dinner, Where when we all take a drink, that means yes, and when we put a drink down, that means we're all doing it. And so,
Morse code with the glasses.
Yes.
Yeah, they work out a code, right?
Yes, and you never, and that's why they do it at dinners, right? Because they never text. There's no records.
Right.
There'll never be a written record of nefarious action, and that's the way. Look, and once you understand,
it's the way the world rolls.
Yeah, and once you understand the game, that's why you can fade the headlines in a bear market. That's why you can use algorithmic levels. Like once you understand that you're being played by the machines or the people behind the machines, then you're just looking for levels. You're looking to get the filet mignon of a move. You're not looking to catch the bottom. You're not looking to sell the top. You're just looking to get yours and get out.
So you're not following the money. You're following the big money. You just want to follow where the flows are.
Yeah, and right now, man, this is a big rollover that's taking place right now in the market, and it's super interesting to me. And I want to get into it a little bit here. So let's take a look here at the VX. So this is the longest period I can remember since 2015, Daniel, that the VIX futures have been inverted. Now this contract goes away here soon, like within a couple days. And so we're going to look at the April contract, the May contract, and June contract, and you still are inverted. This is a month now. Today is a month from the VIX futures inverting, and then a month ago, that Monday, the market started to really roll. And my comment at the time to the fellas and to you here in Stock Nerd listener land was, this is the first time this signal has worked since the pandemic. And it continues to work. And you're like, well, what do you mean by worked? And does it mean the market goes straight down? No, it means this. And I covered this a little bit in the video last night, by the way, before I get into that. So we do the red meat. Like we give red meat, Daniel, 5 nights a week. Mm-hmm. Because there's stock nerds and listeners, and market lovers that want a little red meat at the top. And then
hungry lions, you got to throw them the steak.
Oh, by the way, new topic when I'm done here is I've had a listener write in, a friend of the show, and he says, and I'm going to just read the question, it's a quote here before I get into the markets and a little volatility here. I would love to hear a meltdown by Danny on the possibility of annuities in a 401k. Hold your thought.
The new what on a 401k?
Annuities.
Yeah,
hold your thoughts. So that's where we're headed, okay?
Okay.
So, but now, so I want to show you this. I need to go to different charts at here. So I'm going to get this on a daily chart, and I want to show you just what's happening here, and it's not normal. And markets don't have escape velocity to the upside, okay? They don't have escape velocity to the upside until this ATR number, which I have graphically put here, comes down. Tim, what do you mean by that? Well, look at the slight bend here. It was a daily chart. We're back at 1220. I know the market's been rough, but look at the slight decline to this line and look at what markets are able to do for just a couple days. When you can get a good trend, match it with maybe crossing back over the mean, the 21, or you reclaim the 50-day, like this market's really sold here. So you can reclaim some lower moving averages. But if this little graph here starts to tilt down, and I know this is hindsight, right? But if you can start to get moving average crosses,
right?
If you can start to get this number needs to start coming down. Do you see that, Daniel? Every day for the last 21 trading sessions, not 21 days, calendar days, 21 trading sessions, okay? You've got almost 500 points of movement.
Okay.
That is very volatile. That's not normal. And so what you want to see that number do is you want to see that number start to come down. You can do it a number of ways. You can track it. How would you track it, Tim? Well, you can just do what I do, and I'm looking at it constantly, right? Like every day I'm checking in, I'm taking notes, put it in a spreadsheet. You can graph it. There's a number of ways you can track. When the volatility contracts, it'll show up, of course, in the VIX futures. It'll show up in the VIX, right? But when this number right here, this ATR number starts to contract, you get some moving average crossovers, and we can combine it, Daniel, with another signal. Let's look at the VIX futures on a chart. And so what if the VIX futures were to pull back to the mean and capitulate lower? We got something to build upon, something that may have a modicum, I say a modicum, of trust. But look at this. This is why the VIX is such a dangerous product. The
VIX itself, not the futures.
Well, no, any VIX product. Any VIX product. As Don will say, the road is paved. to hell with people who have shorted the VIX. And so, or bought the VIX. Anyone who's endeavored into the VIX is the tree that Adam and Eve.
It's Satan's spawn. Got it.
Yeah, because you knew I didn't know the whole story about Adam and Eve, didn't you? That was not.
I was pretty confident.
That's a teammate.
I was pretty. I was covering for you.
Well, I appreciate that.
I was stepping in, helping you.
Well, I hope. Okay. Well,
that's that downstairs basement broadcasting. San Antonio.
The SAT school, the San Antonio, the SAB.
That's right.
The SAB.
The old SAB.
Yeah, the old SAB. So here's the thing, like the markets, look at this. This is a daily chart here. So you got the VIX futures coming off, okay? And then you've got, let's put the NQ back up here. And you got the NQ, which was over 250 points higher this morning, is now down 0.5%. We are traversing, folks. Like, and someone will say, why isn't the volatility going up? They're not equally correlated. And that's why when people really want to get into the VIX products and they want to put money behind the VIX products, I always just kind of go, I can't tell you what to do, but I can tell you how you'll hurt.
And good indicator, but tough to play. Tough to invest.
I mean, there's a lot of volatility. Why wouldn't the VIX be going up, right, Daniel? Like, and that's the whole thing. The market's not here for you to make sense of. It's just here for you to interpret the readings. If you're trying to, time out. Has anyone ever tried to rationalize with perhaps an ex-spouse? An ex-spouse that may or may not be crazy. I feel like I'm talking to 50% of the audience here. So how does that go?
On this call, for sure.
I think I'm talking to 100% of this audience.
Yeah.
Hunter, still not married, engaged happily.
Well,
forever.
Yeah, of course.
Ever?
Yeah.
That's Outkast. That's not Kanye. That's Outkast. By the way, Kanye West song. I'm getting into the Kanye West. There is a line in one of these Kanye West songs where he's like, "There's 1,000 of you and only one of me." And I'm like, dude, that's Revere.
Yeah.
Man, I love that line. Yeah, like you got to be. He feels like that's pretty arrogant. No, you got to be proud of who you are.
It's true. And
who we are is a really good shop and defensive in nature, preserving wealth. I turned on. I wanted to hear the Biden speech, right? So I turned on the TV the other day. I think it was Tuesday, right? And I turned it on, and they're interviewing a money manager that says, "This is the time to buy everything. It's on sale." And I'm like, "Come on! This is how you piddle away someone's retirement." And we've had that talk, and Don's done that class where if you just got out, even if you took a loss, like what if you just, hey, I got a 5% loss for the year so far. Markets are down X, Y, and Z. And then when the market's ready to shift to uptrend mode, then you get in. You would be so much further ahead after 20, 30 years of investing, hell, 10 years, 5 years of investing, that you're going to knock the doors off the pants of buy everything, lady.
Well, most important thing is it's an easier ride and easier to stay the course. You don't get scared out. You don't have to light your hair on fire.
Managers never sold in the first place, so how can they buy when things are on sale?
Let's examine that.
It's new money, Don. It's the little $50 your average dollar cost averaging a month.
I want to examine that. Don, let's not let that comment go for 1 second more. How can you add if you're 100% in? And so money managers, Zach, I froze on the screen. Are you taking a screenshot? I love it when you do that. Did I look good there?
Shoot, I don't know if you'd ever noticed me doing that.
That's the first time I've ever noticed you doing
what that was.
Okay.
Yes, all right. I'm
no,
sorry.
I thought something was wrong with the broadcast.
You guys are good.
Yeah. So let's examine that. How can you buy if you're 100% in? And that's why. So on the new website, Daniel, watch how. See, now I went to the Ivy League of broadcast schools, Daniel. Ivy League is not that great. I don't want to start that debate. But
you like the fact I didn't bite on that?
Yes, I did.
You were just
I baited you.
You were just waiting for me to bite.
I baited you. So when you come to the brand new Revere Asset website,
wow, look at that.
You will see this. Revere versus the big firm.
Ooh.
Scripted at the big firms or streetmalladvisor.com, stripmalladvisor.com. That's what we should have called, instead of big firms, strip mall advisors. Your point of contact or relationship manager is a salesperson. Behind closed doors, they're an asset gatherer. When you are 100% in, and they're like, we need to, and the note comes down from on high. So it's not really it's centralized command. So there's a hierarchy, right? And the big office with their marble buildings, they say, we need more money pumping into the firm. So they send out the asset gatherers and they call you at home and say, hey, this is your opportunity. Send us more money. Firms cannot grow. The ones you know in all the strip malls across all the land. And by the way, the ones of you that feel really special with, I've got JPM Wealth. It's the same thing, folks. All these firms cannot grow unless you send them more money when we're in a downtrend. They're not protecting your money.
That's a good point. Their assets under management are shrinking.
They're shrinking.
Because they don't sell, so they got to make up for it.
So how does a firm grow in a downtrend? A corrective. So we're not in a bear market. We've got a thriving economy. Keep the thriving economy.
That's where the buy the dip came from.
I hope we remain in the I hope job growth continues to go. I'm not against I really want a good economy. Believe me, I do. But when you cite the jobs report that's a month old and you tell me inflation is under control, the inflation had 2 days of Putin. Rootin' tootin' Putin really wasn't in that Fed inflation report. Rootin' tootin' Putin, that's the note you're taking?
I like that. Rootin' tootin' Putin.
All right. Never know what's going to tickle Danny's fancy.
Hey, Tim, where can people go to see this cool website again?
Oh, revereasset.com.
Yeah, he got sidetracked. Tim took a left turn.
Yeah.
Right. But this, you got to see this, Daniel. You got to see this. This is such a big freaking number. And it's going to get worse. Worker paychecks fell further behind as inflation-adjusted earnings dropped 0.8% in February, contributing to a 2.6% decline over the past year. You might be getting paid well from what you consider well from Chipotle, Starbucks, Target. We've noted all their price.
You may be getting paid more, but you're not keeping up with inflation.
No, your paycheck actually declined.
Shrank in real terms.
Are we using synonyms for every other word I say?
Yeah, okay. I'm just explaining Tim Interpreter.
I think they know what declined is, but you want with shrank.
That's visual. Yeah, that's right.
It went down.
It went down.
It went down 2.6%. And so how these firms grow, the Wells Fargo, look, I get one-on-one attention. Come to Revere, where not only do you get to talk to the people that make all the decisions, you get all the one-on-one attention you could ever want. We're actually...
Well, we don't farm out the management to mutual funds that have to be fully invested at all times.
That's plausible deniability. When you go to your strip, when you pull into your strip mall and you're like, I'm going to stop at the supermarket and go see my money manager, and you say, hey, what's going on with this fund? It's down like 70% from its highs. Oh, that fund's a great fund, but if you're not happy, I'll switch it. As a matter of fact, that money manager is awful at that fund. Let's get you into this fund. And so what that asset, going back to the Revere Asset website, what this person does here, what this asset gatherer does here is says, I empathize with you. I Bill Clinton you. I feel your pain. Okay. And what I'm going to do is I'm going to fire that money manager so you know I'm taking action. And then I'm going to put you right in another fund that does the same thing. And you're like, well, what do you mean fund that does the same thing? There's like a gazillion mutual funds and ETFs, and there's this much stuff. It's all duplicated.
I want to repeat that point real quick so people don't gloss over that. So folks, there are more mutual funds than there are stocks to put in them. Let me repeat that. There are more mutual funds than individual stocks you can put in those mutual funds. That means all these funds own all the same stuff.
Yep. And so you're just, as someone might say, you're almost in a corrective market. Most likely you're just shuffling the chairs on the Titanic. You know, you're just like,
well, it's either going to firm up or dirty the bed.
Soil the sheets.
Soil the sheet. There you go. Soil the sheets.
Other ways to say the same thing.
Can you get a load of soil on some bed sheets?
Oh, for sure. That's doable.
That's something,
Yeah, that's
right?
visual. I could see that.
Yeah, maybe coming from an elephant's butt, something like that.
I like Don with the anvil.
Yeah, that's not bad.
No,
Can we do both?
We're doing
all.
all.
We're doing all of it. Yeah, right.
We're doing all.
For sure.
Yeah, that for sure.
So real quick, so I showed this on Wednesday, and then we're
We
going to
produced the show while we're doing the show.
Here we are.
I'm sorry, that's so funny.
That's the way it works.
We like to invite people into the shop. All right, everybody knows what we're doing.
It's
here.
the Big Ten.
That's
You
right.
know what? If we came out like your AM radio station, paid shill.
Oh yeah, that comes out and it's all rehearsed.
Nobody would
No, I
like.
get it.
Like
No.
the Stockners. There's a little secret to the magic here. I'm going to give it to you. We give you the strategy for free, 5 nights a week. Here, and then now I'm not joking. 5 nights a week when you go to Tomorrow's Insight, we're giving you exactly what we're doing
On RevereAsset.com.
on RevereAsset.com, 5 nights a week. We don't hold back. Like there's no secret sauce that we're not giving you. And so then we come here and we kind of explain ourselves a little bit, like the thought process, and tell you what we're watching. We set you up for the next week. Nobody does this in asset management. They just give you, and Danny's looking at me like, are you sure nobody? Okay, let's say there's one. Okay. Just to cover my
All right,
butt here.
three.
Yeah, sure.
There's 1,000 of them,
Yeah.
and there's one of us.
That's right.
Okay. And so, well, how do you guys even make money? Because the thing is, we include you. It's educational. You're involved in the process by just watching the videos, having all the access in the world to us. Like, if you want to know,
Well, people become good clients when they understand what you're doing.
yeah,
Because look, if you're giving your life savings to someone to manage, and I mean that's unsettling. That's because you lose control and you're not really sure what's happening. And so if something's going on without them knowing it, if they understand what we're doing and why we're doing it, it makes sense. It's a lot easier.
And so when I don't want to say me, this is not singular, because if without Danny's support to do this back in 2014, this model doesn't exist. So I want to be really careful here. But I always believed that if you had to watch CNBC to figure out what was going on in the markets, as a firm, we're in trouble. And let me explain that. We, from the horse's mouth, should be able to tell you in very layman's terms what we're doing, why we're doing it, and what we see. And from there, we include you. So when we say something that maybe you don't quite understand, or why we did something that you might not agree with, all you do is you email or you call 855-REAL-WEALTH. By the way, if you want the old one here, I think it's still there. We go. You can do anything. You can call, you can email any of us, and we're here. And we call you back on the weekends. We don't put you on some 24-minute hold. We are accessible. So it's transparency, accessibility, plus execution equals the little firm that could. Because we don't advertise.
We're actually getting
bigger
now.
I know. Yeah. But it all started with the nucleus of transparency and accessibility to execution. And that, when you go back to the new website, that's what you don't get. And so in markets like this, where you see them clearly rolling over, and you're 70, 80, 100% invested in Tesla, Amazon, space, because we're going to take some of that. We're going to take some mad money and make you pissed off. That's the only.
We're going to mine zinc on Mars.
Yeah.
It's going to be about a decade, but we're going to do it.
Oh my gosh, that's the plot. Tanya's up watching this movie. I came out the other morning. Tanya was feeding Graham, and I stumbled out to help. And I'm like, "What are you watching?" And it's like this movie with.
More importantly, how are you going to help?
Oh no! We bottle feed Graham.
I'm teasing you.
Did you not notice? My milk's
That was
coming.
my bigger question.
Oh my god.
My milkshake draws all the boys to the
You
yard.
can milk anything with a nipple.
Yeah, that's exactly it. Can we get Ben Stiller in the?
Yeah, I'll add him in. Yeah,
Can we
sure.
do that
Yeah.
with the anvil?
Send that down to the graphics department.
No, it was the one. Oh yeah, it was the one with Robert De Niro. He makes that invention.
Fellas, this is too crass.
The man breast or whatever it was.
I'm not really sure what it was. But
he had a name for it. I just don't remember what it was.
Who's the dude in Titanic that hooked up with Kate Winslet? What's that guy's name?
DiCaprio.
Yes, Leonardo DiCaprio. And the movie's called Look Up. I think
Don't Look Up.
Don't look up.
Don't
and
Look
it's
Up,
like,
yeah.
Listen, I'm not ruining it. Tony told me this movie was awful, like Sharknado. So don't worry.
Sharknado. You
So-
did not watch that whole thing.
I didn't watch Sharknado nor this movie.
Okay.
And so Don't Look Up, she tells me, is there's an Apple-esque Tim Cook type fella that comes in and says, hey, this meteor that's going to destroy Earth actually has some minerals on it that we can make a ton of money off of. Anyway, the people start fighting over the minerals. And what you said, just figure that thought. Listen, so on Wednesday, now you see how I do this, Daniel? I bring them back. Baby, come back. So what we're going to do real quick here, folks, and then we're going to get to Danny and Annuities. I'm going to inverse the chart. So I did a video called The Inverse May Be True.
Mm-hmm.
So on Wednesday, pretty big rally, right? And so all I did was I put a minus sign in front of the chart, and then I said, hey, when you're looking at this chart here of the NQ, and this is not all, there it is. Here, so this is a really super duper bullish chart. And if you were looking at this chart, didn't know this information, dude, we buy that. When it comes down to the 21, we wait for our pitch because the 21, and I explained why the power of the 21, exponential moving average. We buy that chart. Hand over fist. Hand over fist. Right? Oh, did you miss that?
Yeah, he missed it.
Oh,
totally
my
missed
gosh. I
it.
did a hand over fist.
I'm over here looking for pictures of Ben Stiller trying to run the show.
That's why this is the best show on television. So anyway, but then, I'm not going to do all the indices. But the truth of the matter is, this is actually the point where you short.
But because that's bullish and you put a negative sign in front of it, bullish means you'd want to short it.
Yeah. So when you look at the chart, that point was actually where you would short the market. Now I took the minus sign out. I've uninversed the chart. And so.
Or you'd at least pause and not buy.
You don't have to do it. Yeah. And I explained all this in the video. By the way, you can find Hunter's video last night where he talked about distribution. A great video last night, Hunter. And so you go to tomorrow's insights, and is distribution finally. And by the way, when that happens, like they really start to, like Apple has not. So when they really start distributing those things, that's when you're going to see the whoosh slower.
That's when you see the bear market.
Uh-huh. So the inverse may be true.
And explain that. So one of the reasons a couple big tech names are so big, and they're in all the indices, like Apple. When Apple goes, so good, used the old saying in the 70s, so goes GM, so goes the economy. Well, now it's so goes Apple, so goes the stock market.
Yeah, now it's so goes GM, so goes a fireball.
Yeah.
Yeah. Park your cars outside, folks. This one might catch on fire.
Yeah, watch out.
That's a true thing, I think, with the Chevy Bolt.
Yeah.
Yes.
Can you park that on the other side of the parking
Here's
lot?
the thing, folks. You bought that great car. Can you park it 150 feet away from your home?
From the building?
Yeah, because that would be super, because you're a fire hazard. Well, what about when I'm driving it?
You're probably okay.
Yeah, we think you're okay.
The wind will put it out.
We've done some actuarial studies, and we think you're going to be fine. And by the way, when you think I'm being facetious about this, I'm not. GM in the early aughts or maybe the late 90s, had a key lock when we still used keys before we had fobs. The lock was broken when you put your key in there.
Jam, yeah.
It would jam, and it would stop the steering, and people crashed and died. They didn't tell anybody because their actuarial scientist deemed it not statistically relevant. Tell that to the families that died. Mary Barra, by the way.
That was like the Ford Pinto in the 70s.
Mary Barra was a part of GM in the decision-making chain when that thing went down, and I think she should be grilled on it every day. Because if you lost somebody, if you lost a brother, sister, mother, because of that negligence, chalked up to actuarial science. That ain't right. I hate you. I can honestly say that. For that. And Mary Barra is still there. The people aren't held accountable. The only people that have gone to prison recently for hurting the general public are the people from the peanut. There was a peanut listeria outbreak out of Atlanta, out of Georgia, where they knowingly shipped peanut butter that had listeria in it, and they went to prison for it. That's the last time that. I digress. Did I bring down the mood of the show? Because I feel like I just brought down the mood of the show.
No, not at all.
No.
Pick it back up. Pick it back up.
Yeah.
So anyway, you can invert. So there's a number of tools, and I'm telling you, if you really want to know what's going on, and this is, I didn't, my notes had nothing in here about what I'm talking about other than show them the inverse charts one more time. Distribution finally hitting big tech stocks, the transparency of what we bought and why, and then the inverse may be true. Look, there's some really good people that go on television. They're not all bad. Let me just really be clear here. But for us, our clients, the friends of the firm that just follow us but do their own thing, which there's a lot. If you have to rely on a source to figure out what's going on. And by the way, all of you that are with Strip Mall Advisors, JPM, who's the guy? Is JPM Marco Kolonovich, the Super Bowl? Everything's a buy. If you have to rely on that, I think you're...
Well, CNBC, you've got to realize that probably, every once in a while they'll have some good money managers on that people want to hear, so they get them on to legitimize the show. But probably 80% or so of their whole, they're a marketing firm for the sell side, for Wall Street. They're selling products and selling ideas, and they're helping support stocks and different products.
So real quick, if someone said, well, Tim, is there somebody you like to listen to that you found through television? Yeah, this guy named Tony Dwyer. I find his insights really good.
Hey, very quickly, another thing people don't realize, a lot of those people they interview on there are pay to play. They pay a couple $1,000 for a 2-minute interview so that they can get a little video of them and put it on their website, and they can call themselves a CNBC contributor.
Yeah, and so...
but they don't disclose that.
So as I make the transition to Daniel and annuities and you get fired up, so I'm watching Supermarket Sweep, and my fascination with this show, right? I found now on the Buzzer channel on IMDb TV, which is accessible on any platform, by the way. So early 90s Supermarket Sweep, right, was the one I was watching. I found out that they brought back the show from 2000 to 2003, and I found a whole bevy of new episodes. So then it got me thinking. They were asking new questions, but then it got me thinking. They mentioned a product, and I'm like, God, whatever happened to Tato Skins? And I'm like, if there's ever a person who knows the 3 names on these tombstones, Boise's, Wild Chips, and Tato Skins, it might be Don. And that I'm not making a joke like Don, do you remember Tato Skins or Wild Chips?
The Wild Chips were the ones that went literally right through you, right?
Yeah, that's these ones. Olestra. Yeah. Yep. That's why there's a toilet bowl pitcher with Doritos in it.
Those aren't Doritos. Those are Wild Chips, right?
No, well, they're Wild Doritos. Look, fat-free. Like this was Nirvana. Fat-free Ruffles, Doritos, and other chips with Olestra.
They came out with that Olestra. It was a little bit before your time, and everybody got the runs. It didn't. It was.
That's a delight.
That's what Don meant when it went right through you.
No wonder it worked.
So that was like a one-hit wonder. All right, let's get rid of that. Let's go to the next thing.
So then I just started.
That was the fastest product cycle in history.
Yeah. Yeah. Then I'm like, whatever happened to Tato Skins? I used to love those as a kid. And so anyway, Doritos 3D, and I'm like, that'll be good for a transition. Yeah. And now that the transition's done.
Thank you.
Yeah. And so, Danny, why are you upset about annuities and putting annuities into 401ks? Can you give me your top 3 reasons why people should not? What is so dangerous, or what is the malpractice in putting an annuity in a 401k?
Well,
or any IRA product.
Well, so look, most annuities, they've got some newer generation that are no load, no commission, that are very low cost, but that's not what you're being told, because you're being only pitched the ones with the high commission salesman. But, Congress on Capitol Hill, they're jawboning and saying 401ks are way too expensive. These products, the employees are getting screwed. And on the flip side, they're saying we need to put everybody in annuities and get lifetime income. Most annuities have a carrying cost of about 2.5% to 3.5%, just the ongoing mortality and expenses. Mm-hmm. Okay. Then you've got the mutual funds inside the annuities that are expensive. Now, they're not widespread in 401ks for those very reasons. You can offer them if you want, just most people don't. Government 403bs, which is the 401k, but for governments, the only thing you're allowed to put in 403bs is mutual funds and annuities. And so the only people that show up at the teachers' conference is the insurance broker. And so you will actually go into the annuity to buy the Janus fund or the Vanguard fund when those people are actually approved vendors, and you could go directly into Vanguard. In other words, you could go in that same Vanguard fund without having to pay the 2.5% annuity fee to get in there. So they're expensive. And look, the argument is the quote lifetime income and safety. You can always take a lump sum at the end of the day, after the end of the investing cycle, and you could annuitize it. I can always take $300,000 and give it to an insurance company and say, give me a bid. I want you to tell me, based on my actuarial stuff, how much you're going to give me monthly until I die. If I die in 3 months, you keep the whole 300. If I live to 120, I win, and you pay me, whatever, $1,500 a month or $2,000 a month. So the argument that it produces lifetime income. So the annuities have the accumulation phase and the annuitization phase. The accumulation phase, you're saving and growing your wealth. Okay, you're putting money in. Well, you can do that in a 401k or 403b without the annuity. Once you're ready to retire, and if you want the lifetime income through an insurance company, which again I'm not recommending because you can create your own annuity, but if you're going to do that, you can always do that on the back end. So Congress is for sale. They're being bought by the insurance companies and the brokerage firms. I mean, our regulators are influenced by the big boys, that's like you had on our website, the big firms.
Right.
And so it's a huge, so the Congress is talking out of both sides of their mouth. They're talking about the expensive cost inside of the 401ks. But on the flip side, they're talking about adding annuities in there. That just adds to the cost.
I'll tell you what, let's do this. If folks...
Can I ask one question to follow up on what Dan's talking about?
Sure.
And how often do those annuity have an inflation rider?
Ooh.
Well, it depends on the annuity. You can have inflation riders. But it's kind of like, it's not all of them, but some of them. But here's the thing. It's almost like Social Security and CP, the COLA adjustments. They do it at the end of the year, not at the beginning. It's a lagging indicator, so you're always behind in an upward trending inflationary market. So that inflation rider is not as good as you would think. They're quick to lower it when inflation goes down, but they drag when it goes up.
I don't think anybody expected the inflation to do what it's doing right now. I mean, it was transitory, so...
If you have a good enough there's a few annuities that are very good, not the ones they're talking about offering in the 401ks, right. Okay? But you can actually find no load, no commission annuities that have over 300 funds that include precious metals, include commodities, include stuff that will do well during inflation, better than an inflation rider.
So if folks, let's do this. So if folks, whether you're a client or not, it doesn't matter here. If you want to figure out how to create your own, it's really creating your own stream of income at the end of the day.
Right.
I think we should direct people to the website. I mean, to call you specifically.
Okay.
Because we've talked about in the past, there's 2 or 3 really good annuities that if you that's absolutely what you want to do or have to do for some reason. Danny's got those names that he trusts. We don't sell them, by the way. Like we are not annuity. We don't sell insurance. Like that's not our game is strategy and stock. But Danny is.
We can manage them for people if they want, but we're not selling a commission.
No.
You can put the money in one day and take the money out the next. You're not happy.
It's not our product.
Yeah.
But if you want to figure out SANs, like if your parents, loved ones, or yourself are like, this annuity sounds great, talk to Danny. There's a way you can set these up where you're not that trailing ongoing management fee that you could be paying for 20 or 30 years is literally a trailer to the salesperson.
And the insurance company.
Yeah. Come on. There's better, people are so apt to talk no load mutual funds, but when are the no load annuities going to come around? They never will.
They're here.
Well, they're not talked about.
Oh yeah. Well, yeah, they don't want them. They don't want you to talk about them because then they've got to actually they got to do something.
Yes. It's easier if you just pay every year and go away.
Yep.
And so if you want to figure out how to start your own stream of income, your own drip of an annuity over years of investing,
But the other thing is that I forgot to mention is an IRA or 401k is already tax deferred because they go, oh, well, this annuity's tax deferred. I'm already tax deferred. I don't need to put so the only time you should use an annuity during the growth phase, during the accumulation and growth phase, is an after tax money. To me, it shouldn't be in 401ks and 403bs.
Right. Because they're all, anyway. 8-5, look, Danny will talk to you.
Extra layer cost.
Danny will walk the dog with you, do a Zoom meeting with you. It doesn't matter whether you're a client or not. You're not gonna get in some sales cycle. That's not how we work. If you just call and email us and you have a question, you get your question actually answered. And then if you want to keep calling and asking questions, or you want to find out how to become a client of the firm or have Danny do stuff for you, fine. If not, we go our separate ways. As Fleetwood Mac once said, you can go your own way. Go your own way. And with that, Hunter, what you got, brother?
Yes, sir, man. I got some non-tech stuff today in a little bit of different areas, but I am going to circle back around to that big tech distribution comment
Sure, man.
or the video that you mentioned just a moment ago, because I think we can make a little bit of a point about that today potentially. But first ticker, Tim, will you pull up DAR? So I'm going to talk about two names here that are not talked about quite as often in this agricultural operation / chemical agriculture space. So DAR actually has a really nice cup and handle pattern. Tim, are you on a daily there? I believe you are.
I'm on a daily.
Gotcha.
Yep.
So this is one of the charts out there that is not crazy extended like a lot of the commodities have become. For example, like CF, MOS, names like that have gotten very volatile and very extended. This one, not as bad, has come back, kind of tested the 200-day recently on this handle that it's put in and is moving up decently. So I just wanted to point this out because it is a name not many people talk about at all or are very familiar with. I know we've covered it a couple of times over the last year and a half, but potentially setting up again and on our radar. Another name in the similar space, FMC.
Ooh, yeah.
Actually, right at recent highs here, a recent breakout over this 122, 123 area here. Another name in this space that's also not talked about as much, not as much as the mosaics, the nutrients, and the CFs. So teams in that space, that one that's breaking out and one that has a nice cup and handle, possibly setting up for a decent risk reward entry there. And then FCX, another name that is consolidating at to slightly above its recent highs. So it recently broke out above this 45, 46 level, came back and has bounced off the 21, now kind of digesting, consolidating, going sideways here above that 45 and 46 level. Another commodity / minor metal play that has not run off and gotten wildly extended or vastly volatile like we've seen some of these other names have. Moving quickly here, Tim, this is my last individual stocks before we can talk a little bit more about big tech. A sector or industry group I ran across is pollution control, having a very vertical response over the last week and a half. So Tim, pull up WM, and you'll see there was a nasty sell-off started at the beginning of the year like we saw in most stocks across the board. But some big-time volume, not only on the stock, but in the industry group on this recovery, basically starting from the 224 low there. You can see WM more or less went from 138 up to almost 160. But similar to the other charts I was showing you, it's making an effort to get back above the moving averages in the appropriate order. It could just be forming a base up here. It did have a great run in 2021. But RSG is the other name in this space, Tim, and it looks more or less identical. They're very, very similar charts. But the point here is very strong move up with some good volume after a nasty, nasty sell-off, and then finding support at the 21 / the cluster of moving averages like you would expect it to. So some constructive charts there. But what I want to pull you to now, Tim, is you can pull up Tesla or you can pull up Apple today. And I just want to show you that this theme is continuing a little bit here. So Tesla down about 2.5% today, has lagged the markets pretty much since the open after tagging 856 in the pre-market trading. This is one of the biggest holdings of QQQ, and I want to highlight this because Dan alluded to this a moment ago. QQQ is dominated by Apple and Microsoft. They make up about 22% of QQQ. Then you've got Tesla, NVIDIA, Google, Facebook, Amazon that really dominate the rest of it. Those are the remaining big holdings, if you will. So Apple is obviously going to impact the S&P and the Qs really more than anything else. And over the last 2 days, we've seen some weakness in Apple versus the S&P versus the Qs that we haven't really seen all that often over the last year. And so I talked about it in the video last night. Go check that out. I run through some performance comparisons from the fourth quarter of last year to the first quarter of this year. But my point here is Tesla's down 2.5% nearly. Apple was down 1% earlier, currently down about 0.5%. But the point is they're lagging the indices. And we're seeing big tech do that more and more as of recent. And I just want to keep an eye on that. We've got these stocks possibly coming back near those lows. The big tech stuff starting to act a little bit weaker. And that's a trend that we certainly did not see in 2021. So that's all I've got today, man.
Awesomeness. Let's rotate it right to Don. Don, you got moves this week, things you're looking at, talking about the 21 over 21.
A great point that Hunter brought up for the week. The NASDAQ 100 is down 2%. Dow Jones down only 0.5%. And small caps are flat. Small caps and mid caps have been outperforming over the last couple of weeks. As far as the 21 over 21 goes, that'll be updated. Only 2 are being threatened to drop off this week. So, and I've got a list of 16 finalists that are vying for those 2 spots. So there are stocks that are setting up in reasonable buy points, but the market itself is holding these stocks back. I don't know if there'll be a catalyst with the Fed or the Russian-Ukraine war, or there could be good news on the inflation front. There could be a myriad of things that would cause the market to break to the upside. The supposedly slowing economic numbers could be another overhang on the market. But honestly, that's part of the wall of worry that the market always climbs. There's always going to be negativity, and the market can be resilient despite that. But a couple of keys for the market that we're watching. Hunter mentioned Tesla. Tesla had the declining 21-day moving average has been an absolute brick wall for Tesla for a number of weeks now. A big change in character for the market and a big change in character for growth stocks is if that could break decisively below that line that you're drawing right now, that declining 21-day moving average. That's something we're keeping a very close eye on. At the same time, you've got other quality type names like NVIDIA where the charts don't look good. But if that could break up with authority back up through the 200-day moving average, we have a tactical buy strategy that we have called Titans over the 200, which is when good growing companies fall out of favor for a while and they come back up through their 200-day moving average. It's a very low risk entry point to take a spot in one of those, because if it fails, you're closed back below the 200-day moving average is a very quick stop out point.
That's the top
so
strategy.
All in all, and don't the other tot every night in the videos is the tail of the tape that we go through. That's been a very popular segment with listeners, and that's when we go through from top to bottom what's going on with the market, our bull case, our bear case, the decisions that we'll make based on various changes, what we're looking for going into the market every day, how that thing that we're watching resolved itself, and tune in for that.
Danny, that's tot squared.
4 nights a week. Tot squared, or TOTT.
Very creative.
Could also say, but yeah.
I'm just trying to think if we can get
Titans, and honestly, TOTT, Titans over the 200, and tail of the tape, TOTT squared. Ooh. And then everybody's happy if we just do that. So
get some of those tater tots.
Nothing but creativity. Nothing but I'm a fool for acronyms, honestly. So
tots.
What can we say about that, though?
One point
and who doesn't like tots?
Tater tots are the best form of potato.
Yeah.
Like if a restaurant serves tater tots or fries, you go tots, right? If they're crispy,
You go tots.
Yep.
Absolutely.
always go tots.
Yeah.
Like because it's not norm. Like so when someone says, "Hey, tater tots or fries," you go tots.
Potatoes au gratin are pretty good too, but then you're
Wait a
adding
minute.
cheese, so
what,
that you know.
man.
what restaurant is serving you potatoes au gratin through the drive-through?
No.
Well, I don't go through the
restaurant
drive-through
is
often. I try to
saying
avoid the
potatoes.
drive-through.
I like that mashed
Chris,
potatoes and
maybe.
gravy in a fry container, please. Jesus, Danny, can't figure out why it's leaking from the bottom.
Quality potatoes. That's what he's talking about. Yeah.
By the way, I do want to mention one thing that Hunter talked about for people so that it doesn't go into, he was talking about how there are just a few stocks. Apple and Microsoft make up, whatever, 22% of the NASDAQ 100, the QQQ. And then if you add another 6 or 8 stocks, that's really it. Folks, what he's saying is you watch those 12 or so stocks and you know what? So if you're an indexer, if you're a NASDAQ indexer, you got to follow those stocks and those stocks only because all the rest of them don't mean anything. They don't mean anything. Yeah. And on the S&P, it may be about 22 stocks, 25 stocks make up 90% of the whole weight and movement of the S&P. Yeah. So it's only really the small cap, only the Russell where it's a broader spread out thing and you got to pay attention to the advanced decline, all that other stuff. So.
All right, man. I'll tell you what, let's do this. Danny, I know you're heading out of town here, so before you go, let's do the really super, because I got one last thing, and I think it's kind of one of them.
You got real short one last
No,
thing?
I got two one last things.
Oh.
They're both really, really, really short?
Well, not as short as the outro that I want you to do. I need you to do the super short outro.
Okay, folks, talk to you next week. Easy.
Oh, okay. We could do it like that, but I mean, you usually just groan on.
All right, folks, listen, if you like what you heard, please tell a friend, tell a neighbor, just send them to revereasset.com and hit the subscribe button. They can sign up for our daily market insights, red meat, short market video goes out 5 nights a week after the market closes. And then they'll also get this podcast in their inbox, normally Saturday morning. We record it on Friday. We won't reach out to them or spam them. It's up to them to reach out to us. And if they want any kind of portfolio review, have questions about a stock, or they just want a topic they'd like us to discuss on this podcast, you can email any of us at dan@revereasset.com, Tim, Don, or Hunter at revereasset.com, or you can call us old school at 855-REAL-WEALTH.
Real quick, one technical, then I'm going to end the show with a couple, like 2 stocks. So we're having a little bit of, we did the new website. Mm-hmm. I like the new website. Mm-hmm. The iTunes carryover, if you get our podcast, now I realize if you're listening to this podcast, you're okay with the new iTunes. Like this show will be on iTunes. It'll be fine. Our library of shows on iTunes, like the past 7 years or however many. How many years has it been?
It's a lot.
Yeah. 8 years now. 8 years of shows. It actually is 8 years of shows now. March 4th. They're dead links for some reason. But you can always just listen to all of the shows. Tomorrow's Insights. You're like, I want to go back and listen to a podcast. Click the podcast tab, and they're all there. Every single show that we've ever done in the history. You can listen to them there. And then by next week, the podcast for iTunes should be fixed. Don, you still own Halliburton?
We do. We sold it when it got extended earlier this week, went back into it on the pullback, and acting well.
Yeah, so I wanted to show somebody, a lot of people are, sometimes impatience takes over. You don't want to wait for the 21. Halliburton came up. So if you want the scan, I did a scan with folks in the video on Wednesday. By the way, this is a listener-sourced scan, like a stock nerd, really good dude. Months ago sent me this. And so I used it. I'm like, this is a great scan. Let's do it for Wednesday. Halliburton's one of those stocks that pop up there. And so it's super interesting to me. So this is Halliburton. And what Halliburton did on Thursday, I thought was really interesting. Halliburton comes down. So Wednesday I did the video. I'm like, hey, this is what you want to look for in this market. These energy type names are, trending names higher. Nutrient's just a rock star. It doesn't come down. But all these trending type names, you can buy these stocks on the pullbacks. By the way, this show is nothing but edification. It's not advice. But the strategy is you're looking for your least risky point of entry. Halliburton and a bunch of oil names go up yesterday. Energy names go up yesterday. when oil actually came down. That's fascinating.
Yep.
And you look at this. Now you're not even sniffing like down 1% today, but look how far above the 8 now you are. That's a power move on Thursday.
Yep.
I find that interesting. If you want Hunter's got great stocks that he goes over. That list of stocks on Wednesday. Don had a video, all the moves the shop, pretty much it's all the moves the shop made. Sorry, I'm in the wrong tab. All the moves the shop made. That video came out on Tuesday. So if you missed anything this week and you want to catch up with what we're doing, what we bought, what we sold, all you have to do, go Revere Asset, go to Tomorrow's Insights, scroll down a few videos, and you've got a bunch of great television to watch over the weekend.
Folks, we'll talk to you next week on Your Money.